If you're a single person and you apply to purchase a home in a community property state and you qualify to purchase that home on your own, do not get married while you're under contract. Now, this only applies if you are getting a government-backed loan like USDA, FHA, or VA in a community property state. And if you're not sure if you live in a community property state, I will list them all right here. There are only 9 in the entire United States, but sure enough, if you live in one, it'll mess up the whole deal. Now, why is this important? Aside from the fact that there's going to be additional documentation required at closing, this is important because if you are purchasing a home and you are pre-approved on your own and then all of a sudden you get married, we have to count your spouse's debts against you, even if they're not going to be on the loan. True story, I had someone get married while they were under contract. It was discovered during escrow when the underwriter was looking at the bank statements. They saw charges for the Little White Chapel in Vegas. When asked about these charges, the borrower confirmed she did in fact get married. We then were required, because she was getting an FHA loan and barely qualified for this FHA loan, we were required to go ahead and pull her spouse's credit in order to add all of his monthly debts into the debt to income ratio. Even though he was not on the loan, there was no income we could use from him. That's a whole nother story. He also had really poor, really low credit scores. We still had to add in his monthly debt payments. Now, did I end up closing the loan? I sure did. We had to take a few steps back, restructure the loan a little bit, and we did end up needing to extend the timelines, but we did make it work. Moral of the story is, the more debt you have per month, the less you're going to qualify for, even if that is from a spouse that is not going to be on the loan in a community property state if you're getting a government-backed loan.